Good morning, Steve Reed in Chicago with the morning grain comments. Hope everybody had a safe and long holiday weekend. Overnight, soybean prices dropped pretty sharply. Right now, they've come off the lows, but still lower. And we got corn and wheat higher. Each market is kind of individual in its own fundamentals. In the beans, people were kind of scratching their head overnight why beans were down 20 cents when we're tightening U.S. stocks and showing a low carryout that suggests higher prices. I think the first thing is that there was talk that the virus is spreading in China in one province, Hebei. That could eventually lower their demand for soybean imports. So the trade is watching to see how they react to that with strict lockdowns. The other thing is that we might be getting the South American weather problems a little bit smaller than maybe 2 weeks ago. Let's say 20% of Brazil and maybe 30-40% of Argentina will remain mostly dry over the next 30 days. And we'll see if that lowers the crops as much as what we're trading and shifts some demand, both corn and beans, to the U.S. and also raise prices over the recent highs. The other thing I think that we're kind of looking at is just what is going on as far as global trade is. Right now, Argentina is talking about maybe an export tax on corn. In Europe and also especially Black Sea, Russia's talking about an export tax for wheat and corn. And also the Ukraine government is going to have a meeting on January 25th with all important parties to maybe talking about restricting corn exports. So again, I think the wheat market, we saw the Matif making new contract highs. We saw the Chinese futures wheat making new highs. We saw China sell wheat out of the reserve at some $27 a ton higher price than just a week ago. And so now all of a sudden it seems like wheat might be somewhat of a leader in this price rationing rally. Corn might not be too far behind. Beans, I think we're going to have to see a little bit more China buying, and we're going to have to get a little bit closer to South Americans' harvest to see just how much supply they have. I think that a lot of people are reducing their crop numbers, let's say anywhere from 5 to 9 million tons of beans. Maybe somewhere between, let's say, the same amount for corn. And we'll see if that increases our bean exports to the point where we take it below the last USDA carryout of 140. So I still think prices move higher. I think that some people are talking about cash prices here in the United States for beans to approach $13 to $14 versus $11 the USDA is forecasting. And that corn nearby futures could get to 6, and that wheat eventually trades over 7. And so all those things suggest a higher trend in prices. We also note that today, ADM has its second webinar, an outlook on the grains and the rest of the markets. And then tomorrow is the inauguration, which a lot of people will be watching pretty closely, and hopefully it's a smooth transition. As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day. And remember, always treat people like you yourself would like to be treated.